Thank you so much, Sean, and thanks again to Vanguard for sponsoring the event today. I just wanted to pick up on a comment that Sean made about the asset management industry having tectonic plates shifting underneath our feet, because Barry Ritholtz of Ritholtz Wealth Management wrote a piece actually over the weekend, and I'm quoting from him where he said that one of the great variables of appearing at investment conferences is the question and answer session after your presentation. No matter how well prepared you may be, it's hard to anticipate every query. Such was the case earlier this week when I was speaking to employees at a scrappy startup in Pennsylvania. Okay, it was Vanguard Group. It was the last question, and it was a gem. What do you think the financial services industry will look like in 5 or 10 years? And Barry then goes on to make 10 points about what he thinks is going to drive change in the financial services industry. And guess what? The top 3 were 1, declining fees, 2, indexing, and 3, ETFs. So it's a well-timed and very pertinent conference that we're having today. And I want to now move on and talk about how MIFID II and further transparency about trades and costs will impact the ETF market. According to Bloomberg, it could double assets in Europe to as much as $2 trillion in the next 5 years. And for more on that, please give a warm welcome to our next speakers. So I'm now joined by Carmen Gonzalez-Calatayud, Senior Product Specialist at HSBC, Olivier Paquier, who's Head of ETF Distribution Continental Europe at JP Morgan Asset Management, and Henri Boua, ETF Business Development at Bluefin Europe. Welcome to all 3 of you, and thank you so much for being with us today. So, when we were sort of going into MIFID II and there was the build-up to it, I was at a conference last year where there was a lot of talk about how MIFID II would give a big boost for ETFs. And people were sort of saying that it would come perhaps in years, not necessarily months. We're about 6 months in now. So I'm wondering, Carmen, what have you seen so far?
I think so far, the expectations at the beginning when MIFID II came along were quite high for the ETFs, because we all were looking in particular at pre-trade, but in particular at post-trade transparency. And we had this massive expectation that there was going to be that we would be able to see within the fragmentation where everything is trading and how everything is trading. As we approached the D-Day, obviously things were watered down slightly, so we were all a bit apprehensive as to what the change would be. I think it has been good. We already have seen an increase in reported volume, but there still is a long time to go, or sort of not a long, I shouldn't exaggerate so much, but there still are quite a few steps that need to happen. I'm going to introduce the word consolidated tape. You'll hear us talking about it a lot. At the moment, there still is a fragmentation in reporting. So for people like anybody who's looking at a particular ETF, you still need to find your various sources where this reported volume is coming from. So not the big boom that we would have hoped for, but certainly an improvement.
Olivier, have you seen a boom so far, or has it just been a very small improvement?
Well, among the conversations we have with our client base across Europe, clearly there's been a shift, I would say. I don't know if we can talk about a boom, but there's been a shift in terms of questions that clients are asking us and the kind of discussions we're going through. The RFPs as well that we do receive on ETFs and that we do conduct also incorporate a lot of those elements, transparency and cost. And transparency, clients want to understand how we consolidate the transparency on our ETFs, the volumes, the consolidated tape that you were talking earlier about. And they're quite curious to apprehend in the most efficient way the liquidity of our ETFs. Cost is also coming up on the table. So for sure we see new opportunities with our client base, whether they are institutional asset managers or distributors with retail investors in the background, consumers. I think there are new opportunities, new ideas that are coming up, new solutions that are being provided to clients using ETFs with the transparency at both levels, the first level being the portfolio level, and the second layer would be the consolidated tape on the liquidity.
Mm-hmm. And Henri, what have you seen in terms of volume and liquidity so far?
So as a market maker, I will talk more about, let's say, the trading aspect of MIFID 2. And so there was a big expectation of MIFID to bring transparency, because as we know, the goal of MIFID was to bring market transparency and also ensuring that more transactions come to venues, trade on venues, on the regulated venues. So when you look at the ETF market, which was dominated by OTC trading, where there were no obligation of reporting, having MIFID 2 was quite a watershed moment. So a lot of expectations were coming on with MIFID. What we've seen, I would say three things. First, we think that with the discussions that we have with clients, we see that let's say the implementation of MIFID went rather smoothly, because there was no reduction in liquidity. I think when everyone was getting ready and getting the systems ready and making sure that we have all the data to be ready for MIFID, there was some kind of expectation or fear that maybe the liquidity will dry out a bit in the first weeks of MIFID. So first point is that the liquidity was still there, and the implementation went rather smoothly for clients. I think there are a lot of work went in by all the parties, either end clients, market makers, ETF issuers, platforms. So that's the first point. Then in terms of transparency, the 2 points that we see is that in terms of volume, I will speak about the ETF market as at Bluefin, we are our leading market maker on fixed income ETFs. So what we see is, since the 3rd of January till today, clients can see that in terms of volume, 25% is traded on exchange, and 75% is OTC. So this is quite interesting, because pre-MIFID, people were just seeing those 25%, and investors, they could see this liquidity, but now they can see that actually what's traded, the volume traded, is three times more than what they were seeing on exchange. So it's a big change, and in terms of the discussions we have with clients, MIFID can bring to light this trading that was done kind of behind the scenes, and that can help that helps the discussion with clients. The third point, the last point, is that also in terms of price transparency, let's say clients can now see clearly if they trade with the ultimate provider of liquidity. So before MIFID, clients were trading with different counterparties, but not really knowing what was the real cost. But now that they can see the prints, on their volume or their trades, they could see if they trade with the ultimate provider of liquidity or if it's an intermediary that just flip a trade. So they have this transparency, and we have been discussing with a lot of counterparties in light of MIFID and best execution to counterparties who want to speak to the ultimate provider of liquidity, and we want to avoid unnecessary costs. So those things, basically, so the transparency in terms of volume, transparency also in terms of cost and having direct access to the liquidity source has been quite a good experience for investors till the launch of MIFID.
Yeah, it was interesting what you were saying about on-exchange versus off-exchange, and of course that data has become available as well since January because of MIFID 2, because certainly with the cash equity market, one of the aims of MIFID 2 was to bring more trading onto lit markets out of the dark. So the fact that most of the trading still happens off-exchange with ETFs, do you expect that to shift at all, Carmen, now with MIFID 2?
I think this is a tricky question for us, whether obviously historically the trades that were on exchange offered the transparency, the pre-trade and post-trade transparency that we obviously wish for our clients and that our clients expect. ETFs are transparent vehicles. They also should be transparent in their trading. However, as the market has developed and the RFQ platforms in particular have become so prevalent in the market, a lot of these platforms have turned into MTF and are showing some of this transparency, but also there is this new figure of systematic internalizers coming in who are also changing the dynamic as well. And I don't think...
How are they changing the dynamic? Systematic internalizers?
In that they offer the opportunity, they execute the trade in a way, to a similar way that the exchange does, but outside of the exchange. So they offer the best execution tools to the clients, and they can facilitate those trading sometimes in a different way than an exchange would do. And therefore, from our perspective, as long as there is transparency around the trading, whichever platform it goes to is not so relevant, I should say. What is relevant is that within your trading process, you do have a transparency.
Mm-hmm. And you were talking about the questions you've been getting from your clients, Olivier, and increased interest since MIFID II, but how much of the shift has been down to MIFID II alone, and how much of it has actually just been because of the changing mindset of the industry and sort of the changing way that active management and passive are working together?
Yes, just maybe a quick word to add to what you were saying, Carmen. This is, I fully agree with you, and this is especially true on fixed income benchmarked or benchmark-aware ETFs. The price discovery on fixed income ETFs is definitely something that clients are starting they're starting to look at it in a different way. They used to trade a lot of ETFs at NAV, a bit like funds, if you will. But the whole price discovery encapsulated into an ETF wrapper, namely on the fixed income, on the alternative, on the active capabilities, is definitely something we've observed as well. Now, back to your question. I think regulation is one of the elements, in MIFID II in particular, of the adoption of ETFs. It's not the only one, of course. I mean, we see a lot of I would say, other regulations than MIFID II. I'm thinking of EMIR, I'm thinking of MIFIR, guaranteeing a more transparent and secure way of trading ETFs overall. So regulation is a catalyst for sure. And ETFs in general, I believe, benefit from a ricochet effect, if you will, of all of these regulations. I don't think all these regulations were designed for ETFs or ETF-like products, but by a ricochet effect, they do benefit from it. There's also a change in the mindset of clients in terms of usage. I think clients are not, they don't wake up in the morning and be like, today I'm going to be passive, or I'm going to be active in my investment tools, with my investment tools. I think the passive versus active debate is far behind right now. And actually, ETFs enable to basically encapsulate both worlds, passive and active, and each one gets food from the other, basically.
Carmen?
If I might add as well, I mean, there is another element to MIFID II, which is obviously the ban on incentives, which is being implemented across Europe in different ways. And what we're finding is that clearly that shakes up the model in Europe as to how do our invested clients offer investments to their end clients. And what we're finding is that that is definitely helping the shift towards passive and towards what Sean was saying at the beginning, that really we are moving towards a model where definitely there is going to be much more fee-based advice than what we had before, and that clearly suddenly makes passive instruments much more interesting. Now, again, I say this a lot, Europe is relatively fragmented. This is due to culture as well, and each country has different cultures. So it doesn't, in as much as I obviously think ETFs are going to be a big winner of this shift to passive, index funds will also be generally a winner on this one. And we expect that this shift will only continue. We've seen the first steps. I can only echo what Olivier is saying. We're definitely seeing a substantial interest now in anything that is a passive instrument, but it's just the beginning, I would say, and this should be a much bigger boom over time.
The term fragmentation in Europe comes up a lot whenever you talk about ETFs, Henri. Is this something that MIFID II has the power to change, or is that more to do with other factors?
So it's true, I think I agree with Carmen that, and probably also investors also agree, that we think that there's a strong need for a consolidated tape, because it's true that now the liquidity or this trading volume is available for investors to see, but it's still fragmented across a lot of exchanges and APAs, so approved publication arrangements. So it's still quite difficult for, it's still an additional work for investors to consolidate or to aggregate the data. They can do it using, they have different options. They can try to do it themselves and use functions on Bloomberg like Frag, or they can speak to a capital markets team at an ETF issuer, for example, or speak to a market maker to do this. But it's an additional work, and the liquidity, the volume, the trading, the transparency is there, but it's still very fragmented. So we really think that a consolidated tape will help in this sense. What's good? The good point is that ESMA in the MIFID regulation, in the text, they gave themselves, the possibility to, let's say, to name a consolidated tape solution if no commercial player emerge to provide this solution. So we have this option in the text available for ESMA to provide. So I think we will probably, if the situation remains the same, we'll probably see this ESMA coming and intervening on this. Just before, if you give me just 30 seconds. So, and in terms of fragmentation, you spoke about SIs. So I think what the feedback we got from clients about SIs is that basically adding, clients, if they want to trade an ETF today, as I said before, at the moment, we saw that a part is traded on exchange, a lot is OTC, and the main OTC part is done through RFQ platforms. Clients are still, let's say, discussing with, let's say, different SIs are engaging with clients to talk about ETF. But for a lot of them, talking to different SIs, there are so many people that can be SIs that it will add to the fragmentation. Mm-hmm. So for them, they are getting, they are getting the engagement for different SIs. But at the moment, they are quite happy trading, let's say through an RFQ platform, or maybe they would probably be more happy to trade on exchange if the liquidity on exchange is become, better. So I just wanted to mention this point about fragmentation. For that, there's the fragmentation of, the trading volume, and for clients, for some clients, there's a perception that, there might also be a kind of fragmentation in the providers of liquidity. If they have to speak, to several SIs. It will be, in the end, all the actors, especially market makers, who will be driven by the end clients. So I think the end clients will have an experience with all the different, solutions they can have to source liquidity, and we will just, adapt so that the client has a good experience.
Olivier, you wanted to jump in?
Yeah, no, I just wanted to echo what you were saying, in the sense that ETF investors in Europe are, I think, very lucky, because they have the most competitive offering in the world with many ETF providers. You were saying, Henri, that the fragmentation in Europe is still there, it's absolutely true. And just to put things into perspective in 20 seconds, in the US, it's not the case anymore, but there's 4 exchanges, and they have a sort of a consolidated tape report pre and post trade consolidated by ticker. In Europe, to your point, we have various currencies, we have various distribution share classes, sometimes various TERs. So the way we can consolidate the tape in Europe has to be by ISIN code and not by ticker, because if we do that, we will end up with thousands of tickers that are different. So the challenge for the European industry is a bit broader than in the US, and MIFID II is also coming at a stage where the ETF market is much more developed than when the US actually organized and sort of defragmented the market.
And when it comes to investors and clients, I mean, Europe is a little bit behind the US in terms of attracting retail investors still into the ETF space. And probably most people in the retail space aren't aware of MIFID II. But does MIFID II make it more appealing for retail investors to enter the space, do you think?
I think it does in two ways. First of all, it enables retail investors to sort of understand what they're paying for right now, and whether they're conscious of MIFID II or not and other types of regulations is just coming to them. It has to be disclosed to them. And the second aspect of that, in various European countries, there are new solutions that are being brought to ETF retail consumers. I'm thinking of fund solutions, fund of funds that are exclusively dedicated to ETFs and using ETFs. This facilitates the work of an asset manager, if you will, or a distributor by disclosing fully, in full transparency, the costs, whether it's fee-based or whether it's another type of model, but at least it reassures the retail investors as to what they're paying for. Insurance companies as well, through the unit-linked business, is a big area of development.
Carmen, I wanted to ask you what you've been hearing from institutional clients, but you look like you want to add something to Olivier's point first.
Yeah, no, I mean, I would say on the retail space, and I think in the ETF business, we very often talk about retail as being this end investor that we need to win over. And I would turn it on its head in a way, like Olivier is saying, the retail investor is already invested into ETFs through a lot of the solutions that are being offered to them. And I think in particular, I would add to what Olivier said, robo-advisors are bringing, a lot of robo-advisors are fulfilled via ETFs, and that's really opening up the market to retail substantially. So if we use, those funds, if we classify them as retail, I would say the participation is definitely much higher than the 5 to 10% that a lot of people quote.
Mm-hmm. And have you seen any sort of shift from institutional clients since MIFID II began?
I would say the biggest shifts we've seen is more, and I think that to us that makes complete sense, is in the intermediated wealth, simply because the incentive change is making people look at this in more detail. Insurance companies, yes, we see an increased interest, but I think the shift on the intermediated wealth is so substantial that that's where most of the noise is coming from what we see.
Mm-hmm. And to go back to sort of the regulation that you were talking about earlier, Henri, in terms of the industry engaging with regulators, does the ETF industry do enough of that at this point, do you think?
I think it depends. I think as a market maker, we are actually engaging with, with regulators in Europe. We have discussions with them on, I think a lot of the questions are around liquidity, but we engage with regulators. And I think to your point, because we talked a lot about the positives of MIFID, but and for ETFs and etc. But I think if I want to look also at the risk, because you speak about regulation, if you want to look at the risk to the growth of the ETF market, as a market maker, I think we think a lot of the questions we see are really around let's say liquidity transformation. So basically, a lot of investors, going to ETF and thinking that the ETF is liquid, so I can invest in anything. I think we all have, as actors in the ETF industry, to be really clear and mention again to clients that the ETF is a wrapper, and the risk is basically the risk of the underlying market. So we have to be clear on this, and we have discussions with the regulators. When you speak to investors about ETF, we mention those risks, and I think that if everyone in the industry focus on being transparent and continue on this path, it should be supportive for the growth of the ETF market.
Okay. We've run out of time. That's really whizzed by, but just a quick final thought from all of you in terms of the impact of MIFID II, both in encouraging ETF participation, but also perhaps the restrictions, Carmen.
I would slightly change. My parting thought would be, clearly we have a fragmented market in Europe, but I think the operating model of the ETF operating model breaks the traditional operating model that we have, in that it has a provider in there. So I think we as an industry, all the stakeholders or everybody who takes part of it, I think we're going to overcome together the challenges that some of this regulation that has come in posed to us. And coming back to the consolidated tape I mentioned at the beginning, that is one of the challenges that I think we as an industry are clearly going to overcome quite quickly.
Olivier?
On my side, I would say that the regulations are opening up new opportunities with clients. And actually what's going to drive those new opportunities, I think, will be technology. And that's an opportunity, but that's also a challenge, especially for the smaller asset managers providing ETFs, adapting to MIFID II and all the regulations, and embracing the technology. So this would require massive investments.
Henri?
I think, all in all, it's still early because it's been 6 months since MIFID, but I think at the moment, all in all, it's positive, I would say, for the. It's been positive in terms of transparency. In the discussions that we have with clients, we can show them more data, be more transparent. They have more data to do their TCA analysis or a pre-trade analysis. So they will become, I think, more, let's say, at ease with using ETF. Maybe in the way they use equities, they can try to use some of the tools. For fixed income ETF, maybe they will add some more tools. So this is, let's say this is it's a good start. There's still a lot to do, as you mentioned, with the consolidated tape. And the last point I will make is that we always speak about the US, the model in the US. I think we will find the US is a good template, but we probably don't need to copy exactly what the US is doing. I think we will find our own template that will work for European investors, because in the end, European investors are different from US investors.
Great parting thoughts. Thank you so much. Henri Boua from Bluefin, Olivier Paquier from JP Morgan Asset Management, and Carmen Gonzalez-Calatayud from HSBC. Thank you.